Welcome back, and it's that time of the morning when we will have an expert guest joining us to parse the news that we have got overnight and to help us pick stocks for the day, for the week, for the month, for the year. Joining us now is Deven Choksey, Managing Director at DRChoksey Finserv. Thank you very much for joining us, Deven, and here's wishing you a very happy New Year from all of us, me, Rima, and the entire CNBC-TV18 team.
Thank you, Lata. Thank you, Rima. Wish you all a very happy 2025. And we pray God that this year brings a lot more prosperity that we will ever enjoy in our life.
Deven, keep your WhatsApp messages coming. I mean, they're extremely encouraging. I enjoy those. Okay, let's start with the markets now. At this point in time, how are we poised, do you think? The year we thought we would have a 20% gain. But if you looked, as many people have pointed out, from June to December, we have not gone anywhere. We remain at that 23,600 mark. So has the time correction come? And now the stocks will build up? Or is there more of the time correction left?
So, Lata, the understanding is that on one side, we have got plenty of new IPOs which have entered in 2024. And probably the entire market segment got busy with this number of IPOs, including the institutional investors with the retail investors. Everybody seems to be, I think, overly busy with IPOs. Because these IPOs probably have given them the faster return than probably, I think, the frontline stocks would have ever given to them. And that is one of the reasons for which significant part of the activity has shifted towards it. When we looked at, I think, about 80 odd IPOs study that we did, and out of which I think somewhere around we made recommendation out, we found that I think average 40 to 45% kind of appreciation has been produced by IPOs in the listing times, I think post-listing times. So certainly those who invested pre-IPO, those who invested as anchor investors, those who I think started buying after listing and I think exiting after the lock-in period is over, they have made phenomenal gain. This could be one of the reasons for which I think our market remains subdued as far as the frontline stocks are concerned. Frontline stocks, nothing wrong with the fundamentals as I see. I think most of the companies have shown the performance, and at the same time, the valuation-wise Nifty 50 stocks are today putting at around 20 or below 20 PE. Historically, it has been also seen that I think whenever the stocks have gone below 20 PE, I think the reasons have come from everywhere, and probably I think the market has started correcting or re-rating thereafter. I believe that I think that's where probably we are looking at 25. In 2025, probably you should be seeing a smarter rally in some of the large cap stocks which are languishing currently at a lower valuation, but promising to produce better results going forward in these quarters as well as in subsequent quarters.
You know, Deven, talking about large caps, Reliance Industries slipped 5 to 6% in 2024, and it's only the first time in the last 10 years that Reliance Industries is giving you a negative annual return. So after having a subdued return last year, would Reliance Industries be one of the large caps you would bet on? And there's also talk about the Jio IPO.
Yes, I think that's more important. I think the clarity on the future listing of the Jio platform as well as the Reliance retail has been missing. And that probably, I think, checked the patience of most of the long-term investors, those who remain invested for a very long period of time. I think they haven't been finding that clarity coming from Reliance about when they would like to separately list these companies. Having seen the Jio platform reaching the annualized revenue base of 120,000 crore and EBITDA base of 60,000 crore, it is naturally expected that I think this company goes into a separate listing mode and provide the unlocking opportunity to those investors who want to unlock, I think, their investment as well. So from perspective of, I think, looking at this particular aspect, maybe the company hasn't delivered, and that's where probably some of the long-term investors, particularly the FIs, have exited the counter. That is what we gather. Maybe I think corrective course will happen in 2025, as I believe. And I think these two companies, Reliance Retail as well as Jio Platform, both these companies should be separately getting listed. And that's where probably unlocking of the values should take place for Reliance. Maybe patience is being checked at this point of time.
Okay. Well, to be fair, Rima and Deven, even in the US, the Dow has done only 12% this year. It's the NASDAQ which has done 28%. So it is like, if you remember, Deven, you and I were there to cover 2000 as well. It was all IT stocks. At that time, of course, it was the ICE stocks, and then we had some crazy valuations in the internet stocks. So this has been, as you pointed out, the magnificent 7-year, and therefore the smokestack stocks haven't done well. So, with that backdrop, Deven, build a portfolio for us. What may be the winners of, if you're building for an initial investor, how should the portfolio look?
So, Lata, I think to us, the things remain, I think, pretty simple, not very complicated. We believe that some of the large cap companies, which are producing the larger part of the profits also in the entire listed universe, they are the ones who are available at the valuation which is compelling, which is attractive. And that's where we believe that I think larger part of the money should flow into. Maybe I think one would talk about companies like Reliance, one would talk about in some of the banking space, corporate banking companies, even large NBFC companies, including geofinance. Some of these companies have significantly large amount of deep value into them. And we believe that I think these are the companies who could possibly give you faster and better return in 2025. As much as I think we are seeing it, I think the profit performance of these companies are not going to disappoint. On the contrary, I think it is going to probably sustain and surprise on the upside in subsequent quarters. So we believe that I think some of the large bank and BFC companies would be the right choice. Maybe if we start getting some positive news pertaining to the war-related situation between Russia and Ukraine, in my viewpoint, I think some of the metal commodity companies will probably have reason to go up, and that could be a contra-buy opportunity. Also because of the fact that demand would increase from the global side as well, apart from India infrastructure story. More importantly, with the mixture of energy cost, I think, which is along with renewables, which is giving them some amount of tailwind from a profit margin. I believe that I think metal commodity companies could be another choice of companies which one could look at. And I think most importantly, renewable play, wherein the ancillary companies who are basically catering to the larger part of the power generation or power distribution activity, they are the ones who could possibly give you the opportunity to rally further, grow further, and make your portfolio gain further.
When you say ancillary, you mean power ancillary companies, right?
That's right, power ancillary companies. Yeah.
Okay, because that's what we were showing. Okay, then we got you right. Yeah.
Deven, sorry, did you say metals also?
That's right. Yes, I think we remain distinctly positive about the possibilities of metal commodity stock going up, because we believe that I think the demand scenario is going to improve from here on.
Okay.
But dollar's on the rise.
Yeah, there may be, I think, a contradictory situation for a particular quarter or so. I'm not thinking that I think this is going to be a permanent feature. Maybe the markets have the habit to adjust over a period of time. So I think one will have to look around for the opportunity on a contra-buy basis as well.
Okay.